Most people would never stop and think about a $20 bill. It feels small. It disappears quickly. $20 can vanish on a quick meal, a delivery fee, or something bought without a second thought. By the end of the day, it is gone, and most people cannot even remember exactly where it went. But money does not become powerful because of how large it is at the beginning. Money becomes powerful because of what happens to it over time. A small amount used intentionally can slowly grow into something much larger. The key is not the size of the first dollar. The key is what decision is made with it. Imagine someone holding a $20 bill and deciding to treat it differently. Instead of seeing it as spending money, they see it as a seed. A seed by itself looks small and unimpressive, but when planted and given time, it can grow into something much bigger than its starting size. Money can work in the same way. If someone decides to save just $20 a week, the change feels small at first. Most people barely notice $20 leaving their wallet once a week. But that small action repeated consistently begins building something. For weeks pass, and $80 exists that did not exist before. 3 months pass, and $240 has been saved. 1 year later, more than $1,000 has been set aside simply from repeating the same small decision. This is the first lesson that many people overlook. Progress often begins quietly. It begins with small actions that seem insignificant at the moment but become meaningful over time. The real power is not the $20 itself. The real power is consistency. Now imagine that same $20 not just being saved, but invested. Today, it is easier than ever for people to invest small amounts of money. Fractional shares and index funds allow someone to begin participating in the stock market with very little money. That means $20 can begin working immediately. When money is invested, it is no longer sitting still. It becomes connected to the growth of businesses and the economy. Companies develop new products, expand into new markets, and increase their profits. When those companies grow, the value of the investment grows along with them. Now picture $20 invested every week instead of spent. At first the account grows slowly. The numbers seem small, and it might feel like nothing important is happening. But time begins doing something powerful. The money begins to compound. Compounding means the money begins earning returns, and those returns begin earning more returns. The growth builds on itself. In the early years the changes are small, but as time passes the growth begins accelerating. After several years, the total invested is no longer small. After a decade, the account may contain thousands of dollars. The difference between spending and investing those small amounts becomes very clear. The $20 that once disappeared without a trace has now created a financial asset. Another simple path for turning $20 into something larger begins with awareness of spending habits. Many people never notice how often small amounts leave their bank account. A coffee here, a quick delivery order there, a subscription that renews every month without much thought. None of these expenses feel large individually, but together they quietly add up. Imagine someone deciding to redirect just one of those small purchases each week. Instead of buying something unnecessary, they move that same $20 into savings or investments. That single decision alone redirects more than $1,000 per year towards something productive. Over 5 years that becomes more than $5,000, not counting any growth from investing. Another way $20 can grow is through reinvestment. Imagine someone purchasing a small item with the goal of reselling it. Perhaps they find a book, a collectible, or a simple product selling for $20 that can later be sold online for $30. The profit is only $10, but the process has begun. Now the person has $30 to reinvest instead of $20. The next purchase is slightly larger. Maybe that item sells for $40. Then 40 becomes 60, and 60 becomes 100. Over time, the original $20 has multiplied through repeated reinvestment. This is one of the oldest business principles in the world. Small profits reinvested again and again eventually create significant growth. Another powerful example involves learning a skill. $20 can purchase knowledge. It might buy a short course, a book, or access to learning something practical. A person might spend $20 learning basic video editing, graphic design, or writing skills. At first the skill is rough and inexperienced, but with practice, it improves. Soon the person may begin offering a small service online. Someone might pay $10 for a simple project. Another person might pay $20. Over time the quality improves, the prices increase, and what began with a $20 investment in learning becomes a source of income. Skills have the ability to compound just like money does. The more a skill is used, the more valuable it becomes. One small investment in learning can eventually lead to hundreds or even thousands of dollars earned over time. $20 can also become powerful when used to reduce debt. Imagine someone carrying a credit card balance with high interest. Every extra payment reduces the amount of interest being charged each month. An extra $20 may not seem dramatic, but it slowly shortens the time needed to eliminate the balance. As the balance decreases, less money is lost to interest, and more money becomes available for saving or investing. There is another example that many people overlook: building an emergency buffer. Imagine someone placing $20 aside every week into a simple emergency fund. After 1 year, that fund holds more than $1,000. That money can prevent future financial setbacks from turning into crises. Instead of relying on debt when something unexpected happens, the person already has a small safety net waiting. That small safety net can protect financial progress. But perhaps the most important lesson behind all of these examples is the idea of beginning. Many people delay taking control of their finances because they believe they need a large amount of money to start. They tell themselves they will save later when their income increases. They will invest later when they have more available cash. The problem is that later often turns into years. Meanwhile, someone else began with $20. They built the habit early. They saved small amounts consistently. They invested when the numbers were small and allowed time to work in their favor. Years later, the difference between those two paths becomes obvious. The person who waited is still waiting for the perfect moment. The person who began early now has momentum. Their savings have grown, their investments have compounded, and their financial confidence has increased because they practiced managing money over time. This is why the starting amount matters far less than the starting action. $20 will never change a life overnight. But $20 used consistently can begin building a different financial future. It can become savings, investments, skills, or opportunities. Over time, those small beginnings can lead to something meaningful. Every financial journey begins with a single decision. It might be a decision to save. It might be a decision to invest. It might be a decision to learn or to start something small. The amount does not need to be large. What matters is that the process begins. A person who repeatedly chooses to direct small amounts of money toward growth slowly changes their financial direction. The progress may feel slow in the beginning, but the long-term results can be dramatic. $20 may seem small today, but when it is used intentionally and repeated consistently, it becomes more than just spending money. It becomes the first step in building something that grows over time. Now consider how small choices create opportunities beyond money. Saving $20 a week may allow someone to invest in a course or join a community that provides support, mentorship, or new business opportunities. Those opportunities multiply over time because money and knowledge together accelerate growth. Even more, the practice of managing small amounts of money creates habits that carry into other areas of life. Discipline learned by consistently saving or investing $20 each week makes it easier to manage larger sums in the future. Financial responsibility compounds just like money does. In the same way, small investments in tangible assets can multiply. $20 might purchase supplies to start a small craft business. One handmade item sells for $30. Another for $40. Profits reinvested create inventory that grows steadily. Over time, the business reaches hundreds of dollars in weekly income. The initial $20 investment set the foundation. People often underestimate the importance of time combined with repeated action. $20 is not about instant results. It is about building habits, developing discipline, and creating momentum that compounds quietly. Each small step lays the foundation for future opportunities, even if those opportunities feel invisible at first. In 10 years, The person who started saving or investing $20 a week may have tens of thousands of dollars. The person who waited may still be searching for the perfect moment. The difference is rarely luck. It is the steady, consistent use of small amounts over time. The real lesson is simple. Do not underestimate the power of small, repeated actions. $20 can grow into much more when treated with intention. It is not about the money itself. It is about what that money represents, the start of habits, the development of skills, the creation of opportunities, and the growth of wealth through consistent effort. Every financial journey begins with a first step. Often that step is small. Often it is just $20. But when taken seriously and repeated over time, it becomes far more than its initial size. It becomes a foundation. It becomes momentum. And it becomes the first building block of a more secure financial future. Small decisions repeated over years are the quiet engine behind wealth. They turn what feels insignificant today into something meaningful tomorrow. That is the power of $20, used wisely, consistently, and intentionally.